After the president signed the new Inflation Reduction Act, there's something that you should know about. Yes, it's intended to improve energy, healthcare, and taxes. The legislation includes $80 billion in increased funding for the IRS over 10 years. So what does this mean for the average American? What does it mean for the small business and for the massive corporation? In this video, I will explain to you what this is, how this $80 billion will be used, and why you should protect your money. Hi there, welcome to the channel The Foreigner in America, where I teach locals and foreigners everything related to money and personal finances, including investing in the markets, cryptos, real estate, and businesses. So if you're someone like myself who wants to achieve greater wealth in life, you don't settle for pennies but for Benjamins, and you love money, please subscribe to this great channel and hit that bell so you don't miss any one of my weekly videos. Also check out Instagram, TikTok, and my blog under The Foreigner in America, and my book, which is a solid read if you want to be above average in life in every aspect. So I will leave a link below for you to check out. So without further ado, let's begin. This act is intended to do everything except control inflation, which is funny since it's called Inflation Reduction Act. Its main purpose is to collect money. They say it could bring an additional $203 billion in increased revenue. But as you may have heard, they're planning to bring in 87,000 new IRS agents to audit everyone's taxes. So how is this going to impact the average American? They're saying that if you make less than $400,000 a year, you shouldn't worry. Do you really think that if someone making, let's say, $250 a year doesn't pay his taxes properly, he won't be audited? Think twice. Out of the $80 billion for the IRS, $45.6 billion is designated for enforcement. So, over the years, the audits will become more frequent. The 87,000 agents could come handy because they say many are retiring or changing jobs. It's a plan to keep up with the agency. And the positions added with this funding is not only enforcement agents, but also include legal support and investment in technologies that help investigation. So the question here is, if more audits means more focus into low and middle income earners, while they say no, data from the past shows that lower income taxpayers have seen higher than average IRS audit rates. So other data shows that IRS audit rates for people making less than $25,000 a year were 5 times higher than audit rates for high-income taxpayers. So let me talk a little bit about this. Who do you think is more susceptible to being audited and hurt? A person making between $25K and $100K who has problems paying taxes, or a big business or a deep pockets individual who hires a lawyer and a tax expert for $500 an hour? They're always going to apply the law to the weakest. It's survival of the fittest here. So what the IRS wants to do is close the gap of an estimated $600 billion in taxes. So the act also provides $4.8 billion to modernize business systems. So changing phone systems and computers that froze on customers. The IRS still uses technology from 50 years ago. And what happens is we have tremendous backlogs in the returns. So the $3.2 billion for taxpayer services will improve customer service. Having more people to answer the phone during tax season, for example, it will avoid the IRS having millions of unprocessed returns like they did in 2022. So, could you get audited as an individual making less than $400,000 a year if your taxes are not in order? Yes, of course. But there is something called tax relief program for people who owe more than 10 grand in taxes. So go to the IRS website and fill out the questionnaire to see if you can apply. What happens with your business and with large corporations? Well, if you're a small business owner and have your taxes in order, you have nothing to worry about. There are also tax relief programs for businesses and loans. So also go to the IRS website and SBA and check them out. But for large corporations, let's say an Apple or a Google, their revenue surpasses $1 billion a year. What happens with companies like this is two things. And I'm not saying these specific two companies, but massive ones with hundreds of thousands of employees. There are two ways a company like this pays less tax than what they're supposed to pay. One, they report their earnings in other countries. So as a US company, if you make $1 million in India, you're required to report that $1 million in the US and pay the 21% US corporate tax. But if the company is not based in the US, but in the Virgin Islands or in Cayman Islands, those places have no tax. The headquarters are in the US, but the company is foreign. That's a loophole. They know it exists. It's been there for 100 years. No one does anything to close it. Second, taxes on C corporations are based on EBITDA, not revenue. So what does this mean? I made $1 million. I should pay 21% or $210,000 on my revenue, right? Well, not exactly. Listen, before reporting the $1 million as EBITDA, I go and buy a piece of real estate that costs $900,000. It's for the company. So my EBITDA is only $100,000, what was left. And I pay 21% of those $100,000, which is only $21,000. This Inflation Reduction Act says companies making more than $1 billion will pay a minimum 15% tax on earnings. Bingo! Bullseye! Wait a moment. Not so fast. The 15% is based only on adjusted earnings, not gross earnings. This means the government is allowing companies to take deductions before showing the taxes they have to pay. Very skilled lawyers and tax accountants will reduce the tax burden to the limit. Just imagine $1 billion company has an average of 5 employees making 6 figures each, working non-stop on their taxes all year long. So if we know the main loopholes for tax evasion, which are tax havens, foreign accounts, and minimizing EBITDA with deductions, why don't we close them? Because we can't. One thing is that we come out saying on the microphone to sound fancy and impress the average Joe. And another thing is what makes companies fire people. If you tell a company that their tax bill will go up 20% because you're closing all the loopholes, then they will get rid of 20% of their workforce. And that will become a bigger problem for the economy. What do? Nothing. Just bark and bark, but never bite. If your only source of income is a W-2 from a job, then you have nothing to say. Why? Because you don't pay your own taxes. Someone else takes them from you and pays them. Now, if you receive 1099s or produce a K-1, then hire a professional that can assist you to pay your fair share of taxes. I love the say that says, you should pay your fair share of taxes, but never leave a tip. But remember, take control of your life and take control of your money. So thanks a lot for watching this video. If you enjoyed it and found useful information, give me a like. Subscribe and hit that bell so you don't miss any one of my videos as soon as they come out, and you're alerted as well every time I have a new video. So have a great day. Don't lose any money, and I'll see you next time.